Good evening, guys. This is Cicada here. So today I'm going to be teaching or showing you how to kill the London session, right? With the use of the midnight opening range standard deviations, the projections from the midnight opening range, all right? So when you're trading London, sometimes you wonder what made the market turn where it turns between the period of 2 to 5, which is your London, New York time. That's 2 to 5 a.m., right? This will make you even more accurate with your entries, with your silver bullet entry, with all of those things, because it gives you the exact turning point during London. You can even take that and trade that if you're already anticipating a swing close to that range. All right, so let me open my chart. So here we have Nasdaq. This is Nasdaq from the 1st of May 2025, and here we have the midnight so you just look down here as I move my mark. The midnight that's the first candle at midnight. All right, so we had a little bit of consolidation. Here's a run higher, and then it drops all the way down. So the midnight opening range is from 12 o'clock. It's from 12 o'clock to 12:30 New York time. And then you want to measure that range. Okay. And once you do that, now if you're going to be trading London, right? So you want to catch the low of London, or the high of London. In most cases, the low will be the standard deviation of 0.5 of this range here in London, or -1 standard deviation. So if you drop a fib on the highest high and the lowest low between 12 and 12:30, that's your midnight opening range. And then you drop your fib when you're going to be trading London from 2 o'clock to 5 o'clock. That's where you're going to catch the lowest low using those standard deviations, and then you can trade once you see some form of imbalance being filled that's aligning with the standard deviation, or maybe a swing low being taken, a form of sell side being taken that aligns well with the standard deviation somewhere below here. Then you can look at maybe the AMD profile, accumulation, manipulation, distribution. You can use that to your advantage, or to frame your trade, but with the idea that you're already anticipating a swing low to form close to or next to some form of liquidity or an imbalance that aligns with the standard deviation. So I'm now going to open my annotations here so you guys can see. This is my midnight opening range. That's the highest high and the lowest low. So if you look right there, what also you must note is the first presented fair value gap during that period, because it's going to be influential throughout the day. So if you trade in London, it's going to be more influential in London, right? So you extend the first presented fair value gap. Why did I pick this one over that one and over this imbalance here? Because this is the first presented fair value gap, and it's a displacement leg breaking below right there. So that's the first presented displacement. A displacement is in itself a form of a PDRA. So that's a first presented PDRA inside this midnight opening range right there. Okay, so how are we going to use this first presented fair value gap? Look at how influential it is right there. That's another thing that makes it stand out instead of that one or that one. Look at this one. It was respected right here, right there. The body is right there. Those candles right there, not leaving the fair value gap. This one, when it opened, it rejected that fair value gap. So obviously coming into London, which will now open at between 2 o'clock and 5, this is the session you're going to be trading, right? Okay, so before you even start trading, I'm not going to remove this. This is from midnight to um, midnight to half past 12, right? You have this sell side here, and you also have this is another form of buy side, but you're going to be trading here during London. You're already anticipating, maybe let's say you're already anticipating higher prices. Where is the price going to turn? Where is the low of the session going to form? So you simply drop your Fibonacci, you drop from the high because you're having um, a downtrend during midnight. You're going to drop your free from the high to the low here. So these are your most important negative 0.5, negative 1. So you have sell side liquidity and negative 1 rest below sell side liquidity. So if we go below this low, how far? Negative 1 standard deviation of the midnight opening range. And look at the bodies right there. And once we cross that, there's a small inversion fair value gap right there. A small one. This is a small inversion fair value gap. Once we close above that on retracement, you can go long right there. And once we break above this, creating a change in state of delivery right there, you can also go long right there. But also look at the low, high, lower low, and higher high. This area here, this is a bullish breaker right there. So even if you buy, let's say even if you were buying this fair value gap here, you know stop loss should be below the breaker low, you are safe, and this runs all the way up to the buy side right there. When inside the silver bullet, when does that form inside the silver bullet? When do we retrace to this imbalance here? This is a silver bullet entry. This is a silver bullet entry. But this being NFP week, because we have NFP tomorrow, obviously price had to come and keep reclaiming this breaker here, right there, before going out. So you want to have a larger stop loss because it's NFP week. But other than that, this was a good entry. This fair value gap, if you don't trust this inversion, this was a BC. This was a CB, sorry. But once we opened and closed above it, it was used as an inversion right there. Look at the down close candle closing inside that. This one slightly opening slightly below that because it's NFP week. That is completely permissible. Boom, and then it delivered all the way to the buy side right there. Now, in most cases, you are going to see that this is going to be utilized maybe somewhere here to facilitate an entry going high. So if not, then obviously if you drag it all the way up, even after reclaiming the breaker and the change in the bullish order block right there, look at that. The candle, they failed to close below this reclaimed breaker, pushed higher, when all the came back, retested it for the second time after closing above the first presented midnight first presented fair value gap. That immediate rebalance right there was a good entry. Immediate rebalance. Okay, right there. Now let's go to the midnight open from yesterday. So let's go to 429. Or is it 430? Let's see. Uh, Last available bar. What time is this? I want to go to midnight open it for, yeah, there we go. There we go. Now let's look here. This is a second example now. I never checked this. I just said, no, let me teach this because it was beautiful yesterday. It was giving me the perfect example. All right, so here we have the midnight opening range, and this is it. Okay, that's the highest high and the lowest low right there. All right, so you're going to be trading London. Let's say 2 o'clock. Where is 2 o'clock? Somewhere. Let's see, and this is going all the way up, right? So this can be used for targets as well. All right. Okay, so um, if you're gonna be trading London, let's see. There we go. Okay, this day it's showing me. There you go. This is 12 to 12:30, right? There you go. Midnight. All right. So you have this midnight opening range, same thing. Uh, so here I don't have a bias. I'm just showing you the turning points, right? The turning points of this midnight opening range, and the first presented fair value gap. Here I'll take this one because it's the one that has a displacement breaking above here. But also this was not a good displacement breaking above here. So I'll take this one as the first presented fair value gap. Midnight first presented fair value gap. There you go. So here you can see that this negative one standard deviation was a good target for London. We had a pre-London session and that delivered buy side. So obviously going to London, you're going to see some form of consolidation because the market delivered overnight, the pre-market. So you can see here that we had a consolidation, manipulation below midnight opening range, and then a displacement higher, closing above here. So on retracement, what facilitated an entry? This first presented fair value gap gave the entry right there. Boom. So once we open for London, the bias is already bullish. The bias is already bullish. So once we open here, you can just go long on. Okay, once you get that, you can either wait for this imbalance to be filled or go long on immediate rebalance right there, because you can already see there's displacement, there's speed even here, going high, and there's also a displacement. Once this one candle opens and goes on anywhere lower, look inside this candle here, and you can just buy that stop loss below this candle's low, or you can buy the immediate rebalance right there, and then you can use the negative one as a target for your London session. Beautiful, 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 beautiful. So in this case, it's a little bit tricky, but with a good bias, because looking down here, this was already bullish looking after clearing buy side, I mean sell side. And then what happened here? The midnight opening range created a bullish market structure shift. Started right there, first presented fair value gap. So pre-market, you can even trade the macro here. Look at the macro, you wait for it. This is 10 to 50, so it's 1252, and then just put after the macro, what happens? The market drops lower, clearing relative equal lows here, and then it pushes higher. What is that? Institutional order flow entry rule. That tells you that I'm bullish. Closing inside, the bodies are expecting what the first presented fair value gap during midnight pushes higher, then you can just go long here. Target the negative standard deviation. You can even partial out right there, but it's the same thing, just different example and different scenario. Okay, I like this one more, to be honest. This one, like the other one. Where is it? This one. This one is the perfect one, where we use it to gauge the turning point in London. This is the one. This is the one, not for targeting. Oh, but even the other one is also good. Even the other one is also, it's not bad. Not bad at all. So let me check something quickly. Okay. Alright guys, so I think this is it for today. Maybe one more example. This video is gonna be long. Alright, now I'll just find a different example with a trade example. So I'll give you guys with a trade example. When I execute, then you guys are gonna know. I think this is it for today. Any questions, you leave them comment on the comment section below. Cheers.